All right, what's going on, everybody? How you doing? What's up, Dinosaur Muscle Cars and Nibbler? Fighting for first spot. Guys, I'm not worried about Bitcoin tonight. I'm not even worried about it. I'm not doing any TA on it. So, yep, not doing any TA tonight on Bitcoin, guys. I am taking a break from Bitcoin. Tonight is about finding other markets to trade and enjoying the benefits of the Forex. And so if you're here for Bitcoin TA, check out today's video. I did one today already. So hope that helps you. But if you're here to learn trading and want to understand what is going on in the and just in the trading world in general, that's beside the cryptocurrency market, then came to the right place. All right, so let me find you guys on my phone here. I'll put it on the Bitcoin chart just for a second while I'm finding you guys on the phone. Make sure I can chat with everybody. Nice. All right. So looks like video and audio is good. Is it good from your perspective, guys? 7 of you here. Kind of stall a little bit and let a couple other people get in before we jump into the market. Close that. Close that. Got UCAD open. Awesome. Hey, Greg, how's it going? Make sure you guys are here for Trading Night School and not for Bitcoin TA as you come in. I'm limping, Merle. I'm limping, man. But we're going to make it. We're going to make it. If watch these fibs on here. Put your fibs right here. I'm looking at this right now just as a three-wave move. If we get any higher than this, then it's going up to 91, then maybe back down. But most likely not. Most likely not. But who knows? Who cares? Bitcoin's not the only market. I've been trading the Forex all week. It's been kind of choppy in Forex too. So, it's not been the greatest week in Forex. But that being said, I like it a lot better for sure. So, all right, 14 of you here. Just got a couple more minutes. Hey, Tom H., how's it going, buddy? While you're doing this, make sure, guys, I would definitely recommend you guys have a laptop open on this one, maybe this pumping on your TV or another device so you can do this together. Hey, Jeremy, how's it going, buddy? Glad you made it by tonight. So you might want to definitely have like your phone, maybe watching it on the phone, and then doing it on your laptop. Have TradingView open for sure. I'm going to just show you the charts. I'm going to show you some things as well about the foreign exchange. And we're going to jump in. We're going to look at some cool things tonight. Let me just talk about what we're going to look at. We're going to look at what the foreign exchange is, what foreign currency pairs are. We're going to look at the time frames in which the currencies pairs are actually moving in price in general, so that you can find the best times to trade it and understand the benefits that are maximized over and above trading Bitcoin. We're going to talk about just the comparison of the lifestyle that you almost need in order to trade. Got to turn my phone off here, guys. Sorry, but the lifestyle that you need to trade Bitcoin almost sucks. Whereas trading, the Forex is better. Just in America it sucks because of the time frame, but you can adjust your schedule a little bit to catch some of the moves. So I'm going to just talk about that in general, just kind of an overview of what the foreign exchange is, and then how to begin to think about trading it, and how you can start paper trading it tonight, just very, very easily, very simply. So I'm trying to turn down my sound, but it seems that it's already down. But there we go. All right. You guys ready to rock? Yep, extra monitors are good. Extra monitors are good. All right, 16 of you here. How many of you here for night school? All of you? And let me know if you haven't chimed in. Hey, Eric, how's it going? Yep. Yep. Absolutely. Crypto taco. Absolutely. I'm kind of a night owl anyway. I usually jump into a position somewhere between midnight and 2 to 3 a.m. Once I'm into a position, I make sure it's in profit. Once it goes into profit, I sleep like a baby, set my alarms, and wake up in the morning, close the trade a lot of the times. That's the way I operate. All right. Gonna get started. This is a recording, so everybody else who's not here can catch it. So, anyway, I'm not surprised that this is a smaller one of my night streams or live streams because it doesn't say Bitcoin on it for sure. Hey, Adri, how's it going? Or Adri, or Adri, or however you say that. Welcome, buddy. Glad you're here. All right. Hey, I'm just curious, how many of you, this is the first trading night school you've ever been a part of, first trading night school you've ever made? Just let me know in the comments. That'd be cool. Or in the chat. That'd be pretty neat. I'm gonna switch Bitcoin off, guys. I'm gonna leave it running over here in the 4:36 a.m. Well, I'm glad you made it. I hope you're. Have you slept yet, or did you stay up for this guy? I've got to drink water, guys. My gout has been just killing me. I'm going to do my best to get the information to you. First trading night school. Anybody? Seasoned vets. How many seasoned vets are here? First time for me to view live. Oh, nice. Glad you made it live. Crypto taco. Yeah, basically. Okay, yeah. Let's just jump into the content. Okay, guys. Hey Jay, how's it going? I'll see if I can keep you interested. Okay, Adri. I'm sorry you haven't slept, but let's see if we can keep you interested, and we'll get going. Okay, so tonight's an introduction into the Forex, and let's say, okay, why are we talking Forex, guys? Well, here's the deal. Here, I'm gonna make myself a little bit bigger because I just want to talk to you for a second. There you go. So. The Forex is a foreign exchange. Okay, what it is it's an exchange of currencies. If you fly overseas and you are in a foreign location and you want to take your current currency, whatever currency you have, and exchange it for the currency of the nation or the location, then you can do that at an exchange rate. Right now, a lot of times one currency will be stronger than the other, so the kind of cool. Sometimes you'll hear like, oh yeah, the dollar's really strong right now, or it's really weak right now, and you can buy a lot over in England right now, or you can it's your dollars are worth more money over there or worth less money over there, whatever. You can kind of you go at different times, and people understand that, and so. And people try to play that game with the exchange rate. And so basically, when you walk up to a little place and you say, "Here are my dollars. Can I have some? Euros, let's say, or British pounds," then they'll exchange your money right there. They're a broker right there for you. They are brokering an exchange right there at the current rate plus a margin fee or a spread fee. And so basically the foreign exchange is all about exchanging currencies. That means the foreign exchange then is all about banks. Okay, it's all about how banks are moving their money. And so the foreign exchange moves around bank hours. So here's the cool thing, guys. How many of you would like to have your weekends back? Instead of sitting and watching charts all weekend for Bitcoin, you can enjoy your weekends, because on Friday about 4:30 my time, I don't know what time it is. I guess that's 5:30 on Eastern time. Forex closes down. It closes down. It doesn't open up until Sunday my time around 4:30 or 4 o'clock. I can't remember. But open and close right there. You get all weekend. So the Forex actually runs for 5 days a week. Okay, only 5 days a week, and it is 24/7. Those 5 days a week, but it's 24/5. Okay, it's not 24/7. So you get your to trade the Forex, you actually get your weekends back. What also you get is if you're in America in particular, you get your evenings back. Now I don't know about wherever else you are in the world. You're gonna have to do the conversion as to what time of day what times of day are best for you to trade on the Forex, and I'm going to explain those tonight. We're just going to give you just a broad overview of the Forex, and I'm going to get there. But anyway, that's the biggest thing. The other thing is that the moves of the Forex market happen around the bank opens and the bank closes, okay? So the bank opens and the bank closes. The main moves happen there. So when you have session opens and session closes, that's generally when you have the main moves beginning to happen on the foreign exchange. In other words, you can time the moves a lot better. How long have you been sitting to waiting for Bitcoin to move, and it just takes forever, and then all of a sudden, just out of nowhere, you don't understand the time or the whatever, there's no rhyme or reason, it's just boom, Bitcoin starts moving, and you're like, what in the world? And it's frustrating to you. Well, you don't get that as much in the foreign exchange. In fact, there's a cool website you need to know about, and so write this down or go to this on your website right now. It's called the Forex Factory, forexfactory.com. I'm going to minimize myself here a little bit and show you what that looks like. So you go to forexfactory.com right there, boom. What you want to do first of all is right up here where the time is, you want to synchronize your time. So that because this is worldwide time, you want to synchronize your time so it gives you the right time. I'm Central Time US, and make sure the settings are saved. And then you can go to the calendar and watch what's on the calendar as far as news. There's not a lot of news this week, so the market's been pretty sideways, pretty. The first of the year, we're actually it's going to be pretty slow. So this isn't the greatest time in the world to be trading the Forex. Next week and weeks after should be better. But right now, it kind of sucks. This week kind of stunk for the Forex. But that being said, let's look at next week's news, and I'll just show you something. You can see that what you can also do is save your settings. Let me go to my settings for a minute. Where are my settings? Filter right there. I want to get rid of the non-impact and the small impact and do the medium impact and the heavy impact news events. And so we're going to apply that filter. Boom. It'll only show me the medium and the heavy news. And say on Monday, let's go to next week. Let's see. Monday of next week right here. Monday looks like it's the beginning. It's a Japanese outlook report and monetary policy statement. Those are news events that have not been scheduled yet. They're tentative. They're kind of all day. There'll be probably a time put in later, but when those reports come out, that'll be heavy news item. That means the Japanese pairs are probably going to be moving around those news events. Or Monday is going to be a flag day for you because Monday is a big news event for JPY, which JPY stands for Japanese yen. And so any of the Japanese yen pairs are going to be solid around on Monday for a good move, okay? On the next day, you've just got moderate, medium impact ideas, JPY still, but nothing special. But on Wednesday, you've got CAD news, and there's a lot of CAD news. So you're going to look at high impact CAD news at 9 o'clock, at 10, okay? So it's a big time CAD day on Wednesday. So next week, you want to be trading or at least eyeballing or preparing for moves that might be happening in the CAD pairs, or staying away from the market because it's very volatile during those times. But here's the deal: the move of the market happens around those news events, and those news events are scheduled for 7:30 my time, 9 o'clock my time, and so I'm actually on alert during those times. Okay, so I guess my point is to say that the Forex is a market that happens around scheduled news events, as well as as well as bank hours. And so when you have bank hours and scheduled news events, it just makes the timing of the moves a lot more predictable. Let's say you can't predict the move, okay? You can't know the moves, but you get a window of time. You're like, okay, I'm watching the market during this time, looking for my entry maybe here or there, depending on your strategy. It just also depends on the strategy, whether you're small time frame, high time frame. But if you wanted to day trade the Forex at 20 pips a day, which is one of my strategies to do, I try to get about 20 pips a day on average. If I don't get 20 pips one day or whatever, I want to average that through the week. So I want to average about 80 to 100 pips a week, to upwards to 150 pips a week if I can. That's a fantastic salary. You'll be doing very well as long as you're trading enough margin for that. So anyway, so I guess the benefit I want to share with the Forex is that you're trading currencies just like you are BTC and LTC. It's just that you're trading those currencies. It's just different currencies. It's fiat currencies rather than cryptocurrencies, right? And they can be just as volatile, guys, just as volatile as Bitcoin and Litecoin. The moves can be very big. And sometimes just go sideways, just like Bitcoin does. So to be honest with you, there's a lot of overlap in the market. For sure. So anyway, that's some of the benefits there. Other benefits of the Forex is that to me, in the Forex, down here at the bottom, if you open up at the bottom of your trading view panel here, you'll see these where it says, let's see, crypto screener, text notes, Pine editor, strategy tester, trading panel. You see all that? Well, click on trading panel and open it up. And what you're going to find is a list of exchanges right here that already have relationships with TradingView, so that if you get an account with any one of these, right, any one of these exchanges, whether it's Oanda or AMP or TradeStation or Alpaca or Forex.com. I'm with Forex.com. It's funny. It's got the lowest rating out of all of them. I might have to try one of these others for one time. But I guess that being said, they have relationships with TradingView that you can actually trade right within the program. I can actually log into my Forex account. I can click on Forex.com right there. Boom. Type in my username and my password. All my account information comes up at the bottom in this trading panel. I know how much I have in my account. I know what positions I have open. I can buy and sell using this little thing right here, and I can do it all within TradingView. And then you have an app on your phone that you can also use that you get with most of these guys. Let me see if I can try to show you here. You got an app on your phone. So like right now, I'll just show you a position. Let's see if I can. I'm in a position right now in UCAD. I'm down $72. Not really a big deal. That's like 4 pips for me. But anyway, this is an app right here that I know exactly. I can pull up the charts right here. I can see what's going on. I can, let's see. I don't want to show you the rest of the accounts there. But anyway, point is that I have an app right here that kind of tells me where I am, and and I can trade within the app very nicely. Okay. All right. With that being said, hold on one second, guys. All right. Keep that over here. Okay, so those are, I guess that's the first thing I just want to share with you, that this is another market, guys, that has volatile moves. I mean, this is the 1 minute time frame. Sorry, guys. This has been sideways action here, but let me show you my trades last week on the UCAD right here. I traded, let's see, I didn't catch this move right here because that was December. I wasn't trading UCAD in December, but I did see about middle of December, it was about Christmas Day, I noticed that UCAD was going sideways, about ready for a breakdown. I actually traded this move down to the downside, and I caught most of these pips here. There's 198 pips. I probably caught 100 of those pips, probably, because I was in and out of the market during that time cycle. But that being said, that's an example that you catch 100 pips. That's fantastic, and that was within a period of December 26th through December 31st. That's a week's time. We got my 100 pips. I was happy, and we were good to go. All right, so let's see here. Get back on the chat here. Yeah, I'm getting ready to show you Crypto Taco, the paper trader. I'm getting ready to show you that. All right, in just a little bit. All right, so those are some of the benefits. It's 5 days a week rather than 7 days a week. The timing of the moves happen around bank hours, and so you can really kind of catch those a little bit better. And you're not, waiting up all night long. You can trade right within TradingView. You don't need some other exchange. You can your broker can be attached right here through TradingView, or you can use your broker's platform, which they'll all have their own platform that you can log into as well. So yeah, that being said. All right, now let's just talk about the different types of currencies you can trade. We can talk about the major pairs, and then all the other pairs. Okay, so let's talk about the majors first. If you go to a website called, if you just Google PIP margin calculator, Forex, if you want to type in forex.com, PIP margin calculator, you'll get to a website that looks something like this. It's a pretty handy little tool that I'll show you. This is for the forex.com exchange, and I'll just show you how this works and how it functions. So in trading, when you trade on the Forex, you're not going, the price of the, in Bitcoin, you got the price moving hundreds of dollars, right? Well, so the price is moving, in the hundreds place and the tens place. When you're trading currencies like $1 against $1 in another currency, the currencies are moving to the 10,000ths place. Okay, so in other words, the price for CAD over the last month has been ranging from 1.3329 to 1.29. So I mean, you're only talking about 4 cents is the value of the Canadian dollar against the United States dollar. In other words, US CAD, UCAD is dollar is right at $1.29. What's it at right now? It's at it's at 131, almost 130 and 130 and 5/100ths. So anyway, what's up, Stanley? How's it going? We're talking about the Forex. This is a trading night school. Glad you stopped by. So anyway, what you'll see here on the price line then is a pip. Then is how we say what we is the language we use in the foreign exchange. In other words, we're going for pips. So let me talk about pips for a minute. A pip is basically a value of a currency. Oh, come on. There we go. Value of a currency to the 10,000ths place. Okay, that's a number. Oh, come on. That's some number, let's call it a 1, with a decimal and then 4 zeros, okay? 4 zeros. That fourth zero is the pip location, okay? So if it's a 5, if your currency goes from 1.0005 to 1.0000, what has happened is your currency has decreased in its value 5 pips, okay? And so that's the way we talk about it. And so, anyway, your trades are measured by pips then. And so when you enter into a trade, you buy certain what we call lots, a lot of money, not A-L-O-T, like one word or the word a lot, but A and then L-O-T, lot. A lot, which I'll talk about the different types of lots there are, but you buy a certain quantity of currency, we call it a lot size, and depending on how much you buy will depend upon how much money you're going to make or lose as the currency increases or decreases in value, okay? So what I shoot for, again, is 20 to 50 pips per trade. That's I try to get in and out of the market, and I'm going to show you why I do that shortly. But anyway, try to go from anywhere from 20 to 50 pips within a trade. We try not to get too greedy. And so in other words, we want to see price move in that 10,000ths place about 20 points to 50 points. Okay, let me show you what the different lot sizes are now. Okay, so with that being said, and I'm going to show you on the pip margin calculator here in just a minute. But when we talk about lot sizes, let's talk about lots. When you buy on the Forex, you're going to buy it in what's called a standard lot. Now, you can buy multiple standards, okay? But a standard lot is 100,000 units of that currency, okay? 100,000 units of that currency. It's $100,000, okay? So that's a standard lot. Okay. Now you can trade 2 lots or 3 lots or half of a lot. So if you wanted to do a half, now there is no such thing as a half of a lot, but you can buy half of a lot. It's just basically, but a half of a lot would be 50,000. Okay. 70. Let's see. I'll just type this down. This isn't something you can actually, it's called a half a lot, but I mean, it's 0.5 lots. So 0.5 lots then would equal $50,000. Okay. If you you wanted to trade 3/4 of a lot, that's 0.75 lots, right? And that would equal $75,000. Okay, that's what you'd be trading. So you need margin to do that. You've got to have margin to be able to do that. And so we'll talk about what that margin costs, because you don't have $100,000, do you? But you have to have a certain amount of money to be able to access that capital in order to be able to trade that size. Okay. All right. So you got the standard lot. Then the next is you're going to have a mini lot. A mini lot. A mini lot is what we call 10,000. It's $10,000. Okay. You can trade multiple minis. And so if you had $50,000, you would have 5 mini lots is what you would have. Okay. And then finally, the last, how do I say it? The last, what's the word? Lot size that you can buy, let me just say it like that, is micro lot. And a micro lot is $1,000. Okay. Now, in a standard lot, generally every pip is going to be worth $10. $10 per pip. Win or lose, $10. Okay. Generally speaking, these aren't perfect, and I'll show you in particular the pairs and I'll show you how to calculate how much your pips are worth. Okay, but generally, a mini lot is going to be worth $1 per pip. I'm talking U.S. Okay, so you'll have to calculate that with your own currency if you're overseas. Okay, yeah, I guess you can trade a nano. I suppose you can. I've never gone that small before. To me, a micro lot is plenty small to even be practicing. And then when you're trading a micro lot, every lot is on every win, or every pip, I should say, is basically 10 cents, $0.1 per pip. Okay. So that's the way that works. Okay, so those are the lot size. Now I'm going to take you to a website. We're going to just show you the different ideas that you can think there. I'll show you the different ways to think about that. Okay, so everybody doing okay so far? How we doing? Any questions so far about what pips are? About what lot sizes are. I'm gonna talk more about lot sizes and margin and how much is required and how much you need to be able to trade it and think of that nature. But for now, how is everybody doing with the information? Still got a good stream. All right. I know this is very basic, but a lot of people just don't understand these very basic things, and and what you don't know scares you. But this is such an easy market to get involved in, and it's a lot of fun, especially if you're coming from crypto. Anything that's unclear about what I've said, dinosaur, or is everything working? Okay, let's review just very quickly. When you're dealing with the foreign exchange, you're dealing with currency. So you're trading the U.S. dollar. I haven't talked about this. I guess I meant the U.S. dollar against the Canadian dollar. Okay, that's what we call the UCAD pair, and that's the one I'm actually in right now, the USD CAD. So that's UCAD. You can trade the euro against the U.S. dollar. That's the euro USD. You can trade, and we're going to talk about the different pairs that you can do, but you're trading currencies against each other. So as the value of one goes up and or the other, you're playing the currency against the other currency and making money with the exchange rate, basically, is how you're doing it. You're trading for pips, okay, which is a 10,000th place. So in other words, the 10,000th place, the fourth decimal place is a pip. So that's what you're playing for. You want to see price move. A nice trade is anywhere from 20 to 50 pips. A nice small trade. A nice swing trade, if you're swing trading it, you're looking for 100 to 200 to even 500 pips in a swing trade if you're holding it for long term. So I would say you start a minimum of a swing trade about 100 pips in one swing trade, and then probably even thinking about 200 to 500 for a smaller. You can go to 1,000 for 1,000 pips and even 2,000 pips for really long-term swing trades over a period of months and maybe even a year or years, even just depending on how the price moves. And I'll show you that in just a minute, okay? And I'll show you how to calculate pips and how many pips things are moving and whatnot, and you'll be able to see that in just a second, okay? All right, so when you trade on the foreign exchange, you trade in lot sizes. So you're gonna basically put up your own money so you can trade with a lot or a mini lot or a micro lot or any valuation in between. You can have a standard and 5 minis, and that would be 1.5 lots. Or you could have 5 micros, that would be $5,000. You could trade 5 minis, that would be $50,000. You could trade 2 minis. You can trade 2.2 minis. You can trade any value of currency that you want, okay? You can trade any one that you want. And I'm going to show you how to enter a trade today and paper trade it tonight, and how you can actually start calculating these things and just playing around with it. So, all right, let's move on to the pip margin calculator. So if you want to open it up in your web browser, you got just basically forex.com. And if you just in Google, if you just type in, I usually just do pip margin calculator, boom. I don't know if that's because Google knows me or what, but try pip margin calculator, find the one for forex.com and click on it, and that'll get you where you want to go. And that brings you to this page right here where you have how much margin you need for how many pips you basically how much the value of per pip you're going to get based on your contract size. Okay. All right. So let's just say you have for easy numbers, you've got a $5,000 Forex account. That means you have $5,000 of your own money transferred to the Forex account and you're ready to start trading. Okay. I do not recommend you trade $5,000 worth of stuff. Okay. In fact, I don't recommend you start trading that much at all. What I would recommend that you do at the beginning is start in the mini or micro level. I would definitely start in the micro level. I would actually start paper trading before you ever put real money up. Learn to trade first. If you're already a good trader, you just need to learn what the Forex is about, and that's a different story. Okay, so with that being said, here are your contract sizes, and here are your majors. So you see where it says currencies and majors? You got the majors, you've got the minors, the minor pairs, and then you've got the metals, which is gold, silver, platinum, things like that. Then you've got exotic pairs, and those would be like the Czechoslovakian, the Turkish yuan, I think it's called. I don't trade these guys. The Mexican, those are the exotics. I generally stay in the majors and the minors. That's where I stay personally. Okay, so right now let's just stay in the majors. And so the major dollars across the world are the Australian dollar, we call the Aussie or the Aussie dollar. That's AUD. Okay, and that paired against the US dollar is a major pair. Okay, now the Aussie dollar can be traded against the euro dollar. It can be traded against the pound. It can be traded against CAD. Okay, so you can pair any other currency with the Aussie dollar, but the major pair out of all the Aussie is the Aussie US pair. Okay, in fact, all these majors are all US pairs. Okay, now another major pair that we have is the euro dollar against the US dollar. It's the euro against the US. Okay. Then you've got the GBP. That's the pound, the Great British Pound against the US dollar. Okay. GBP USD. We call it GU. A lot of times when you're typing stuff, you'll just type in AU, EU, GU. Okay. That'll kind of let you know. You don't have to type in all 6 digits. you can just basically type in, AU, and I know you're trading the Aussie US dollar. Hey, what are you looking at in GU? Okay, I know you're trading the what we call the cable, or the British pound against the US dollar. Okay, then you've got the US dollar against the Canadian dollar, okay, or CAD, okay. US dollar against the CAD, and then the US dollar against the chief, which we call chief, which is basically the Swiss franc. Okay, CHF is the chief, or Swiss franc. I don't know why. I don't know why it's CHF, but it's basically it's for Switzerland's franc. So the US dollar, so U chief, or is the way we usually call it, USD. The U chief is how we call it, basically, in just vernacular. And then you got USD JPY. JPY is the Japanese yen. Okay, so those are all the different pairs of majors in the US dollar. So then you can click on contract size, and what you've got here is you can have 1,000, which is a mini lot, and if you click on 1,000, it's already actually on there. In the Aussie dollar, basically you need $20 US dollars in your trading account in order to trade $1,000 of $1,000 of US currency, or Aussie dollar. So in other words, all you need to open all you need in margin to open a micro lot. I think I said mini, but I think I meant to say micro. A micro lot of $1,000 is $20. That's all you need in your margin account. Now you need to have more to cover negative balances, right? So I would have $50 in there. You could trade a micro. That means every pip that you gain is going to be worth 10 cents. Now here's the cool thing about trading on the micro level. If you gain a 20 pip trade, you're gonna win $2. It's not that big of a deal, right? But listen, if you lose 20 pips in your trade, which you will lose, I promise you're gonna lose learning, then you only lose $2. Okay, so you start small so that your wins are small, but your losses are small, and you work your way up until you can learn how to trade consistently for 10, 20, and 30 pips on a regular basis without killing yourself, and you learn how to manage your account. So anyway, begin small. I would begin paper trading first with no money of yourself. But if you can't handle that and you need a real environment of trading, then trade micros, okay? Now, once you get a little bit more confident, say you wanted to trade 2 micros, I just click on 2 micros here, and it kind of calculates it for me. Every pip is worth 20 cents now. It's 2 micros. That's pretty easy to count. You also need double the margin. So now I need $41 in the margin account. So in other words, I would have to have $40 in my account to trade with. So you can throw $100 in a trading account and start trading micro lots here, small sizes, and it's money in there. You don't have to worry about losing because it's only $100, and you can actually play with real money, and see if you can grow that to $200. If you can take $100 and make it $200, you can take 1,000 and make it 2,000, and you can take 20,000 and make it 40,000. So it's the same thing. It's just multiplied over on your risk, and it becomes the more risk, the more loss, and the more reward. And you have to manage your greed, your fear, and all those emotions that come with trading. But that being said, you work your way up to it. So your contract size there, so they calculate it for you. If you want to get down to 10,000, that's a mini lot right there. So every pip is worth $1. That means if you gain a pip, if you're on the right side of the trade, then you've made $1 per pip. So if the price increased or decreased 20 pips to your direction, then you made $20. Okay, and so forth. And so then when you go to a standard lot of 100,000, it calculates it for you. Every pip is worth $10. Now that means your required margin there, you have to have a $2,000 account. But listen, you don't trade your entire account because you have to have margin left over to cover any negative balance, because your trades will start off in the negative. They always do, because of spread, and we'll talk about that probably in another video, maybe tonight. I don't know. I just don't want to overwhelm you guys too much. But basically, you need to have enough. You want to. I would say at least a third. So if you wanted to, ideally in an ideal world, you want to have double the amount you're trading. So if you're trading, one standard lot that costs you $2,067, you're going to want to have $4,120 in your account to be able to cover that Now that's probably overkill, but that's again for safety purposes for yourself. But you could do better. That allows you to also open other trades if you had to manage a bad trade that you've entered or something like that. But anyway, this is where you can kind of calculate how much margin you need or how much cash you need to be able to trade the different sizes on each pair, because every pair is different. So if we go down to the Euro USD, guys, the micro lot costs you $22 as opposed to the micro lot on Aussie. It costs you $20 or 20 and 60 cents. So it actually costs you less in margin. Not that much of a difference, though. Every pip is worth 10 cents on that level. As you go up to a mini lot, you now need $222 in your account, and you make $1 per pip. Or as you go to the $100,000 level, you now need $2,226 in your account, and every pip is worth $10. Okay, you lose 10 or gain 10 per pip that it moves. Okay, now keep in mind most currency pairs move somewhere within 30 to 120 pips per day. Okay, you get a good range of 30 to 120 pips, sometimes 200 pips in a day on big days, depending on the pair. So different pairs move different volatility. We'll talk about that on another day. But for now, you just got to understand. Listen, if you let yourself stay in a trade too long, you want to keep your stop losses where you're only losing 5 or 10 pips at the most. Because if you're making 20 pips, that's basically a 2-to-1. So if you're going for 20 pips, but you're losing 10 pips, then that's 2-to-1. That's a minimum you want to trade with. I really prefer 3-to-1 ratios. And so, you're going for 20 pips. That means 7 pips is about all you want to let yourself go down. Things like that. Those are things you'll have to think about as we think of risk management later down the road. All right, so basically to recap this area, basically what we're showing is that how much money you need in your account to be able to trade a contract size. The contract sizes or the lot size are standards, minis, and micros. Okay, standard is 100,000, mini is 10,000, micro is 1,000. Okay, and you could trade that small if you want, and it tells you how much you need in the account to be able to trade that many of them, and it tells you how many pips you would make per pip or lose per pip for that contract size. How are we doing with that information so far? Any questions? Excuse me 1 second. Type your questions. I'm going to go get some water. Be right back. It's not fast, guys. Okay, I'm back. No questions. How we doing? Doing okay? 23 of you here. I lost some of you. That's all right. I understand. Carrie, that's a more advanced question, but real quick, basically you sign up, like for me, Forex.com, I attached my bank account with it. Boom, I can wire money through what we call, just to like send a check over the wire. It happens instantaneously, like boom, once you've connected your bank account with or given the information. I think there's a verification process. Maybe not. I can't remember. I think it goes pretty fast. I think I got money up there in one evening one time, I think, if I remember right. But yeah, you just transfer it right from a checking account. Boom, done. But it needs to be cash. I know there's some exchanges like the Prime Prime XBT, which I'm getting ready to sign up for an affiliate program with them. Basically, they do crypto and they do Forex and they do commodities like corn or oil or gold or silver, things like that. So they do them all, which is pretty cool. It's all in one place. You don't have to, so you can actually transfer BTC into that and trade right from BTC and other currencies. So that's pretty cool. Okay, now, hey, let's all create a paper trading account right now, and let's put a trade in, and I'll show you how it works. Okay, ready to do it? Sure you are. We're gonna go to UCAD for now. My UCAD trade is not being happy to me. It's been bothering me for the last week. Waiting for it to go down and just doesn't want it to go down. Okay. All right, y'all tracking? Y'all with me? Ready to go? So what you do right here in Trading View, right here at the bottom where it says Trading Panel, click Trading Panel, and over here on the left it says Paper Trading by Trading View. It's pretty easy. Pretty easy. Just click on Paper Trading by Trading View. Done. Boom. Finished. All right, now, I had to open position somehow. So what we want to do now is we want to reset the account. So what I suggest that you do is you trade this account like you would your real account. So imagine how much money you want to transfer over to your to Forex to trade it. Okay, let's just say you've got $1,000. You say, okay, I'm willing to trade $1,000 right now. That's all I'm willing to put up right now. That's what I've got. Maybe that's what you have to trade. So you go here. What you do is this little body right here. Once you've clicked on paper trading, it'll come up here. This little person right here. Right click on that dude, and I'm sorry, don't right click. Left click on that guy, and it says reset paper trading account. That's all you got to do. Hit reset paper trading account. And then it'll ask you, how much of a balance do you want to have? So how much money do you want to pretend is in the account? I'm going to say $1,000. Okay? Just going to say $1,000. Okay, you can say 10,000, you can say 5,000, you can say 100, but you need to put in an amount that you think you'll be trading so you can have a realistic trading experience. Because a lot of people, you got $50,000, you're trading like you had $50,000, and you'd be like, oh, yeah, it's just not realistic. Trade what you think you'll be trading. That's important. Okay? So, $2,000, I would recommend, I'm not giving financial advice here, but for me, I found a good $2,500 balance to start with is pretty good. So I'm going to choose $2,500, and there's my, now you can see where it says right here, where it says positions. If I go right here at positions, then I just simply look at account balance. It says $2,500. My equity is $2,500. My open profit or loss is 0. So I have an empty account. There it is. You are now ready to trade in Trading View. Okay. So now let's find a pair to trade for kicks here. Okay. Now, very simply, when I look at this chart, right? Let me do that again. When I look at this chart right here, I see an ABC structure. Okay, ABC. It's a large correction that I see another corrective structure that's not finished. Okay, to me, this looks like it needs to do this, and so that's why I'm trading it to the downside. Boom, boom, boom. Okay, let's see. So, yep, and so I'm expecting it to come down here in this region somewhere and say, how many pips is that, Jim? Is that even worth trading at that small of a time frame? Well, take a peek here. From where it is now down to this region here is 40 pips, okay? That's a 40 pip trade. It's not, again, all I'm looking for is 20 to 50 pip trades. So I'm looking for 20 pips out of this guy. So yeah, we can trade it to the downside. If you say, hey, that's low probability, Jim, it might be. So wait for it to come on down, because the next move, most likely, if I had to guess what this thing is going to do, is it's going to do this trick. Okay, so I'm going to wait for the price to come on down here and go long. If the chart is showing that at the time, we got to let the chart reveal itself. But that's what I think is going to happen. That's my analysis. That's based on my long-term. And we're not worried about the analysis right now or how to analyze the chart per se. But that's my trade idea. Okay, so let's say right now, hey, let's see on the 15-minute chart. You see how price has been messing around in this region here. So what's price going to do? Is price going to come up? Is price going to come up here first? Come on. Price going to come up here first and then come on down? Maybe. Or could price just come on down from here? We've got some kind of a 1, 2, 1, 2, and we're working another 1, 2, or some kind of a triangle or whatever. What's happening here? Who knows what's happening? But let's just say, hey, I'm ready to enter this trade, and I want to trade it to the downside right now. That means you're ready to do a market order, okay? So on your screen, you should see the sell and the buy toggle thing here. If you don't see it, just right-click on the screen, okay? Right-click on the screen, anywhere on the screen, and go down to settings, okay? Go where it says in the chart settings, go to where it says trading, right here, trading, boom, click it. And then you want to, you basically want to make sure the show positions, show orders, okay? I would extend lines to the left. Let's see, I would show the executions. I would show the buy and sell panel. If you want sounds to play, okay, fine. Show price levels with no ask and no bid. Okay, so anyway, check these guys, whichever ones you want, but make sure it says show the buy and sell panel, okay? So click OK. Once you've done that, make sure show buy and sell panel is done. So now let's sell the UCAD, or we could buy it, okay? What do you guys want to do? Y'all want to buy UCAD right now or sell it? I'll let you guys decide. And, you know, this isn't necessarily the time you'd want to enter the trade, but let's just, in fact, we would want to wait till London market, and we'll talk about that in a minute. But let's just play with it for a second. Hello, anybody here? I feel like I'm by myself tonight, guys. I really do. All right, let's buy the UCAD. Jeremy says, anybody else got an idea? Tom wants to buy it. Two people want to buy or sell, and nobody else has an opinion. Let's see. Hey, Max, what's up, buddy? Dinosaur Muscle Cars wants to buy. All right, let's buy it. All right, so click buy. Boom. That brings up the, all you got to do is just click the buy. It brings up your trading panel right here. Okay? Yeah, that's true, Adri. That's exactly true. We're not talking trading techniques so much. I'm just getting your feet wet in the market, how to do it, okay? So, all right, so here's the, so basically you want to make sure buy is there, not sell, but if you want to sell, make sure it's the sell is clicked, okay? But let's buy, okay? You can sell, you can do whatever you want, but I'm going to, for the sake of this, okay. Now I've got a $2,500 account, so I'm going to go to my pip margin calculator. I'm going to go to UCAD, and let's see how much. If I wanted to buy $20,000, I need to have $400 in my account. That's pretty good. That leaves me a lot of margin left. That's a very, very small risk to reward. Again, I'm not recommending or giving financial advice here. I'm just saying, okay, yeah, 400. I got $2,500 in the account. I'm only putting 400 of it up for the trade. That means my pips, my price per pip is going to be $1.53. It does all the calculations for me. So yeah, so I'm going to go back into UCAD, and I'm going to say I want to buy, and all you do is you type in, okay, how much did I say? What did I say I wanted? I can't remember. $20,000. Okay, so I'm just going to simply do 20,000. Who knows what 20,000 would evaluate to? Would it be a standard, a mini, or a micro, and how many of those? Okay, 20,000. So with that being said, once I hit $20,000, I'm going to go ahead and say buy 20,000. Click it, and done. It's done. The order is placed. It's in there. Okay. And now what you're going to find in just a second, once the order finishes processing, it's going to show up on the screen my position. Okay, it's executed, so the order went in, it executed. You'll notice that I started immediately in the red, and that actually the price that I bought it at, guys, is actually higher than the price because there's a 2.2 pip spread. So if you look right over here, guys, is the spread that I just paid was 2.2 pips. So in other words, I had to pay a spread to my broker of 2.2 pips in order to make that trade. So that's where the broker makes his money, on the spread. Okay, so your trades will always start out in the negative. Don't worry, if you're trading the right side, 2 pips ain't that big of a deal. All right. So anyway, there's my profit and loss. Right now I'm in a loss of $3.83. And that is not, yes, it would be two micro lots. No, it wouldn't be micros. It would be two minis. So micro is smaller than mini. I always forget which. So yeah, $20,000 is two minis. Glad you're here, Max. Glad you're here, buddy. You cannot limit or eliminate the spread because the spread is the same. It's kind of set per pair, and you'll pay different spreads at different times of the day, and so you have to pay attention to the spread that's there. If you go to Pip Margin Calculator, you'll kind of see the spread. Let's see. The margin is 2%. Okay, it's 2%. So it's 2 pips here. On GBP USD, you're going to pay 5 pips, pretty much for the most part, or 5%. And so it calculates the pips there. So basically, I'll show you. If you click on any one of my pairs, like for instance, if you do Euro USD, Euro USD has the smallest spread out of everybody. Right now it's 1.9, but a lot of times it's like 1.1, 1.2, 1.4 pips, whatever. It's very, very small. So the movement or the number of pips spread is small comparatively on the Euro USD. So yeah, that's something to keep in mind. A lot of people trade, but again, the Euro USD is one of the most manipulated currencies because of the small spread. But again, that's what it is. GBP USD. Let's go to that one. The spread right now is it's only 2.6 pips. It's only 2.6 pips. Let's see. NZD USD, which is the New Zealand dollar, that's 3 pips right now. It'll tell you right between the buy and the sell. See sell and buy, and then it'll have a number right here. That's the number. That's the spread, and that's how many pips you're going to pay for that trade. Okay, you'll notice here that I actually have a little symbol next to UCAD in my watch list. It has an L on it because I have a long position there. So I click there and I've got a long position. Nothing's really happened so far since I've done it. Right now we're in what we call the Asian market. So price isn't moving very volatilely right now. It's moving very slowly. And we haven't talked about the sessions yet. And I want to get to it, but we're running out of time. But anyway, basically, and I want to show you session timings just to kind of give you an idea of the beauty of this. But basically, if you click on paper trading down here, you'll see that you have a position open of 20,000, and this is what you bought it at. This is your profit. You can close the trade very easily by hitting the X right here. Hit X. It says, do you want to close this trade? You say close the position, and you can close it, or you can keep it open. Now, if you want to put a stop in here, here's how you do it. So basically, all you got to do is click your current position. So click this blue 20,000 right there. Click it, and you see where it says now modify. So you say I want to take profit. Let's take profit when I get 20 pips. And you can calculate wherever your target is, you can calculate that. Let's just say you're thinking price is going to come up to this line right here. So let's just draw a line right here. See this little area right there? Let's just say you think price is coming up there. So you can take this little ruler measure right here, Okay, and when you click on that guy, all you got to do is click on the beginning of your position and drag it up to where you think you want, and it tells you how many pips you are away. This is, if you look at that screen, it's 8.7 pips. Okay, that number beyond the percentage is 8. So it's 0.07%, or it's 8.7 pips. Okay, and then you know how much your pips are per trade. It's a $1.53 pip value. You can kind of see that here. Let me finish that right there. $1.53. So if you get the 8 pips times $1.53, you're gonna get what, $12, something like that. So that's gonna be a $12 trade. But you say, okay, I want to close this trade in 8 pips. Boom, you hit 8 pips, take profit, and say, listen, if this thing goes against me, if this thing goes against me 5 pips, then I'm out of the trade. You can hit stop loss and take profit. So 5 pips, if it goes against me 5 pips, I'm out. If it goes for me 8 pips, I take the profit there. Now, I'm not saying that's good trading. I'm simply showing you that what that does for you is it allows you to have a stop loss and a take profit, and it's all right there on the screen. If you say, oh, I want to move my stop loss a little closer, you can move it up. It'll ask you to modify it. You click modify, and it's done. You can just drag it down a little bit. You can click modify, and it's done. You can take if you think it's going to go higher, just move your take profit a little higher. Boom. Once the price gets into profit, you can move your stop loss up to break even, right underneath break even or something like that. You get the idea, right? Oh, stop. Okay. So that's how you do your take profits and your stop loss right there in TradingView, and that's the benefit of using one of the exchanges that already have the relationship with TradingView. You can trade right in here inside of TradingView, and it's beautiful. It's easy, pretty easy. So. How we doing? Doing all right? All right. So the last thing we want to talk about, let me just talk about the main benefit of why I trade the Forex, okay? It's for the timing of the sessions. Guys, it is 10:30 my time. And I am well aware that tonight at about 2 o'clock, 1 o'clock to 2 o'clock my time, that's 3 o'clock Eastern time, that's 2 o'clock Central time where I am. I know the London banks are going to be, the shorts process is just reverse, is just the sell button, okay? So we're long right now. Oh, by the way, I didn't mention, you can go ahead and switch your position. You say, oh, I got the position wrong. You can click this arrow flip-flop, and it says reverse position. It'll ask you, do you want to reverse it? And it'll just reverse the position right there. You'll pay whatever the negative balance is. You'll also pay the new new spread fees, and then you go from there. So they'll be, and it'll calculate it for you, and it'll all be right there in your account. Okay. All right. So the benefit is, I know that the London banks are opening at 8 a.m. their time. Okay. And so let's see, 8 a.m. their time is about 2 a.m. my time. And so what I'm going to do is I'm going to go to a 2-hour time frame. Okay. And I'm going to just show you what happens at bank hours. Okay. Let me just show you. Come with me. On this adventure. All right. All right. Right here. This is, let's see. How about right here? Boom. That purple line right there. Now this is UCAD, okay? But look what happened. Right here at the 2 o'clock hour, there was, let's see, on the 2 o'clock hour, there's a final push up. And then at 4 o'clock, okay, we had the move started going down, okay? So between 2 and 4 a.m. right there, the move, let's see, how many pips was that move, okay? That move was, in price, was 47 pips. That 47 pip move happened right between 2 and 4 o'clock. And so you would have entered your trade in that time frame, okay, because that's what we're looking for. And if I was when I was trading this, guys, I mean, you can see it clear as day, can't you? Can't you see you got this 5-wave move, you got a 3-wave pullback, you're looking for the C wave. Then we got a 3-wave move to the upside, guys, and that means I'm looking for a 3-wave to the a bigger 3-wave to the downside, and that hasn't finished taking place yet. That's why I am short currently, but looks like we might be coming up here in this region before we go back down. We'll have to wait and see on that. But I know that the banks are opening around 2 a.m., and you can see here's a place right here where the volatility began just shortly after 2 a.m. Let's see what time this was right here when this move finished. This is 8 a.m. So what time do you what banks open at around the 8 a.m. hour? What do you think? Around the 8 a.m. hour. What banks in the world open 8 a.m. in the U.S.? Wonder. Now, this is 8 a.m. my time and 2 a.m. my time. You're going to have to calculate what London time and New York time is. But 8 a.m. is New York time, right? Yeah, the New York banks open. So what we call the New York session opens around 7:30 to 8 o'clock in the morning. Okay, and so you're going to see a move. We had a reversal almost to the tick right on the hour. We had a finished wave that went up, and then in the next 2-hour time frame, let's go to the 1-hour time frame just so we can see it better. There we go. So the 8 o'clock time frame, we had a finished move to the upside, and then let's see, right at 9 a.m., guys. At 9 a.m. it topped out, and at 10 a.m. the descent it started. I mean, actually, it started descending at 9 o'clock, and so you can kind of see that the moves happen. If you were long in this, you could have been thinking about taking profit around that time, okay? Or you could have been thinking about going short here because that was another 48 pip move, okay? As a 40 pip move. Now, you might have only been trying to get 20 of that, and that's fine. And that's my strategy because a lot of times you only get these small little moves of 20 to 40 pips, and then it reverses on you and it takes back your trade. Like, for instance, this thing over a period of hours went down, and then it came back over a period of hours over Asian session. We'll talk about that in a minute. And it came back and it took half your profit. It took half your profit back. And if you didn't stay in that trade, then you lost half that profit. Or if you did stay in the trade, you lost half your profit, and then it continues down, which is fine. You can stay in the trade like that longer. But if you just say, hey, I got my 20 pips, I'm out, I'm good with the profit, I'm happy. That's the way we think about it. Okay, so you can see that this was the New York session opening at 8 a.m. This was the London session, and there was a move just shortly after open. But this is UCAD, guys. This is UCAD. The Canadian dollar generally likes to move around the U.S. time. But you can see here. Let me show you another thing here. Here's 1 a.m. and 2 a.m. right there. This is 1 a.m. and 2 a.m. So this is London time opening. And now look what was happening prior to London opening. We had the sideways consolidation. The market wasn't doing anything. As soon as the London banks open, boom, it starts to move. Okay, and so now this is the hour time frame. You got to understand that, but still, you can kind of see how there's a move right there on at the 1 o'clock hour. Okay, let me show you again. Here. Right here. This is right there. This candle right there, I put that line, is the beginning of London market. That's 2 a.m. Okay, that's 2 a.m. my time. You can see how it went down for a fake out, and the very next candle, boom, we had a nice move. How high was that move? This move was 69 pips. This other move, if you stayed in it all the way to the end, was over 100 pips. I didn't get it all. Let me see if I can get it all. Yeah, right there is 116 pips there. So you get it. So if you were making $1 a pip, then you made $100 on that trade. If you made $10 a pip, you made $1,000 on that trade right there. So you can kind of see, guys, right when London opens. And now look what happened right here. What do you think happened right here when we had a reversal of trend, a little bit of a correction? What do you think happened right here? Let's see what time it was. So I'm just going to put something right there. Boom, right there at the top of this candle right there is the beginning of the New York session. That's 8 a.m. our time, 9 a.m. in that ballpark. So between 8 and 10 a.m., guys, we had this move to the downside, okay? Between 8 and 10 a.m. How much was that move? I mean, you could have got that move for 40 pips, okay? So that would have been a 40 pip move. And that's why, again, that's a small move. You're trading a correction. You're going against the trend. We get it. But now right here, there was really no trading in this section right here. There's just no trading in here. Hardly anything. It's just going sideways, sideways, sideways. And this is over the holidays, guys. This is over the holidays. Okay. Prior to the holidays, look at this beautiful move we caught. Now you can see all my TA that I was doing. At around the time I had my direction set. I knew where I wanted to trade. I threw this line on here. Once I had a break and a retest, it was on like Donkey Kong. I took that trade down to the downside. Okay, and so that's the way I traded that one. How many pips? I think I already calculated this guy. This guy was 200 pips. I caught about half of that. Basically, I was in and out of the trade during this time. Okay, I caught the first leg down to here and probably part of the second leg, again, because I like to be in and out of the trade. Okay. All right. Let's see what the time frames are. See if there's any time that started the move. Okay. Right down here at the pivot point. This is 9 a.m. right here. Actually, let me try again. Yeah, right here is between 9 and 10 a.m. right there. That is right after so at the beginning of New York, we had a finish move, and then we had a reversal that went sideways forever. So they finished up their working day, guys, right like the first part of the half day on New York session on December 31st, and then they just let it go for several days, and then they came back after January 7th and started doing business again. But it hasn't been very volatile. It's been pretty sideways. I'm waiting for the next big move to the upside. I think there's going to be a move to the downside first before up, but I could be wrong on that. All right, how we doing? You guys, man, a lot of you dropped out. I lost a lot of you. But I guess what I wanted to show you tonight is that the beginning of London and the beginning of New York, you see how these moves happen. I mean, and the moves will pivot right on the hour, guys. I mean, like sometimes it's right on 2 o'clock. Sometimes it's right on 4 o'clock or right. So there's a session between between 1 and 4 o'clock, there's a move. And I'm always looking at the market during those hours. Then I go to sleep and wake up for New York and see how this trade is doing. If I don't see a trade during London, then I'll just wake up at New York time and look for another move for 20 or 40 pips. Yep, you can do a trailing stop. You can definitely do any number of things that you want to do as far as trading is concerned. My purpose here is just to kind of show you how this market revolves around bank hours, okay? I can show you every time you see a big pivot, I can probably show you that it's very, very close to a bank open or a bank close, okay? Now, the session that I didn't talk about is the Asian session and the Aussie session. The Aussie session happens in the evening time for me at the close of the New York session. And so basically at the close of New York, you got the opening of Aussie. It happens about 2 hours before Asia. And then you've got the Asian session, so Asian, Aussie. And so if you like to trade in the evening time in the US, you definitely want to be trading the Asian pairs against the Aussie pairs, okay? So Aussie, New Zealand against the JPY, something like that. So the Aussie JPY is what you want to be trading around session timing. Other than that, guys, you don't want to be trading in the evening because everywhere you kind of see this sideways movement, I will almost guarantee you that when you see that sideways movement, those are going to be the hours of the Asian session. Let me show you. Like right here, for instance. Right there where the market's hardly doing anything right there. Now this is hard because it's like right before Christmas, but you can kind of still get the idea. This is 1600 hours, guys. This is right at the close of the American banks. Asian banks are open. And then right here on this, let's see. Right here on this candle, let me see if I can identify it. London banks are open right there. Okay, so you had to wait a couple hours for this move, about 6 a.m. before this thing started tanking. Okay, but it actually started prior to that, but still the move kind of went sideways for hours and hours until that move was able to follow through. Okay, let's see, what is more profitable, trading Forex or cryptos? I mean, listen, I personally I do better in the Forex market. Just because it's a regulated market, whereas the crypto space is not regulated. The exchanges are evil. They will take your money. They do moves when you don't expect it, when you're sleeping. Basically it's just too much work for the BTC market. And so, I mean, I still trade it. There's no doubt about it. But I just prefer, I'm more consistent, I guess. My strategy is more consistent probably too in the Forex than it is. I think I'm probably going to apply a in and out strategy with Bitcoin as well, because when we're in these corrective phases. Now, when we go into a big bull move, I'll probably just hodl for a little while. So, yeah. Yeah, I think you can probably trade both and see which one you like the best. Which one do you understand the best? But you got to understand, guys, there's ups and downs. Look at this market, up and down, up and down, up and down, up and down, up and down. And so if you're only trying to get 20 pips or so, then that's the way you take it. Let me just show you a couple more examples of the timing of the sessions here. Okay, see how all this is sideways? All this is sideways. Now that was over a couple of days, but within that time frame, you're going to have sideways action that happens in the Asian hours. So the Asian session, for me, starts around 6:30. It's going to end somewhere around 4 a.m. London time. So that's why you get the best moves at about between 2 and 4 a.m. London session. That's 8 and 10 a.m. and if you're in the UK. Okay. I personally, it doesn't matter what platform I use. Just right down here, I would suggest. Let's see. Let me log out here. I would suggest using one of these right down here on the bottom of TradingView. Just click on Trading Panel. At one of these exchanges right here, I personally use Forex.com, but it doesn't matter. Any of these will have, now paper trading is not an exchange. It just lets you use paper trading right now. Set up your account. You can go back in the video and pick that up. So any of these exchanges will let you tie in with TradingView and trade within TradingView like I'm showing you to do it. Okay. All right, well, guys, there's your intro into what do you call it? Forex. Again, look at the timings right here. Boom, that's 7, 8 a.m. right there. That's the beginning of New York. Let's see what's this move right down here. This is the beginning of New York right here. This move to the upside, beginning of New York. I mean, it's just over and over and over. It's uncanny. This is actually this move right here. Is the beginning of London session the next day, and all the sideways movement right here is New York and Asian session, and then you get the big move in London. Okay, let's see right here. This move right here happened New York session. Boom. Okay, so you can, if you catch these waves, guys, you can really, again, we're not trying to catch the whole move necessarily. We want to catch about 20 pips. That was a 60 or 70 pip move. That would have been a nice one to catch over a period of hours to catch. So anyway, to have a TradingView account, I mean, I think it's, I don't know, the smallest account is under 100 a year. I think I pay like $90. I got like half off because I threatened to quit. They gave me a half off. I paid like $90 for the one that I'm on. I think I'm not quite the top tier in TradingView, but I have the second to the highest. I'm pro. I'm in the pro. I didn't go to the ultimate or whatever the highest one is, but yeah, look at that stuff and you can kind of look into that stuff and see what you think. So yeah, the moves happen around the news hour, like 7:30, 9 o'clock, in those time frames. But you can know where the move's going before the news happens. Okay. In other words, we don't trade, and a lot of people like to stay out of the market when the news, because these moves happen really fast. But the volatile moves are what you want. You want those pips, right? And so basically, you wait for the market to reveal itself. Shoot, on the hour time frame, guys, I want to just show you how consistent this works. Okay, draw yourself a trend line. As soon as it breaks, jump in and catch your 20 pips. Okay, I can't tell you, just a simple trend line break. Okay, this thing went sideways for hours and hours and hours. Just draw that trend line. As soon as you get a break of it, boom, jump in. It'll retest it, whatever. But so when you see it's consolidating like this, draw yourself a line. When it breaks, jump in and wait that trade out. So I mean, it's pretty simple, guys. It's not. I mean, that's a simple trend trading strategy to catch these moves. Okay, and you try to time your entries, guys. You're looking for these breaks to be around the New York or London session at the open or close of those sessions. Okay. All right, you can get a demo account with all those exchanges, guys, for free, and trade their demo account. But with the paper trading, you don't need a demo account. I already showed you how to do that. Just click on paper trading, you connect it, and then boom, it's already got my account. I'm still in the negative right now because UCAD isn't doing anything. It's moved like a half a pip or something like that. So anyway, you're gonna start out in the negative. I'm gonna go ahead and close that trade out just by hitting close position. I'm done, and yeah, like that. So all right, well, there's an introduction to the Forex market. Play with it a little bit. Do not throw your money in it till you understand. And what I would suggest that you do is go back through the charts on the 1 hour, on the 15-minute, and then watch how close the moves happen within those hour time frames between 2 and 4 o'clock, or it's 3 and 5 o'clock on Eastern time, 2 and 4 Central time. And you'll have to calculate it yourself. So you need to know when the banks open. London opens at 8 a.m. Basically, it all opens at 8 a.m. It opens. Let's see, in New York, I think it opens at 7:30 to 8 a.m. So like that. So understand those things, okay? And that's when the banks are doing their business. They open the banks, and boom, they start doing business. And that's why there's volatile moves. They had orders from the other day, and they need to process them quickly and get them going. So, all right, that's critical to get. And when you understand the Forex, that it's built around the bank hours. Okay, so you've got the London session, you've got the basically London session, New York session, Asian session. And the Aussie session is really with the Asian session. There's only a 2-hour difference between the two. So we call it Asian. So those are the main 3 sessions you need to know. London, New York, Asian. And then during Asian, you generally don't want to be trading. It's generally sideways during the Asian session. Well, guys, if you liked it, make sure you hit like. Guys, thanks for showing up. I hope that was helpful to you and just expands your horizon and your markets. You don't have to be stuck in Bitcoin. When Bitcoin's doing nothing, you don't have to be stuck looking at it going sideways forever. You can trade something more interesting and a little bit more predictable as well when those moves are going to happen. Get your 20 pips, get your 40 pips, and get out of there. And then wait for the next trade the next day, because there will be another trade for 20 pips the next day. Okay, you'll be able to find it through the different pairs. And all I looked at today, guys, was a UCAD. Okay, imagine if you're looking all through the different pairs, because the markets move different days for different pairs. Okay, and so that's why I said you got to look at the news. So next week we're looking at Wednesday, guys, for CAD. Okay, looking at Wednesday for CAD. Big move going to happen on Wednesday. You just got to know which direction it's going. All right, guys. Hope that was helpful. I hope you enjoyed it. That'll get you going. Start playing with it. We'll pick up next week where we left off. We'll do a little bit more Forex introduction for you. We'll talk about some other pairs, about the sessions and whatnot, and you can kind of start learning. Okay. All right. Have a great night. We'll talk to you later. Thanks for chiming in, and for at least those of you that were hanging around. Talk to you later.